Welcome to DRGLT Economics. Today, the Federal Reserve Bank of the United States raised its funds rates by 0.5 percentage point. This comes after a period of relative strength of the USD in comparison to a basket of major fiat currencies. So these two events have prompted me to think of what will take for the US dollar to keep its relative strength, if it's possible, and how long this will last. In today's podcast, I will discuss these two issues. First, I will discuss three mechanisms that I can see that could lead to a period of relative strength in the USD in comparison to other major fiat currencies. Secondly, I will discuss how long I think this period will last, because I don't think this will last forever. Now, I've just a brief digression. I want to say that I made a slight mistake, actually a big mistake, during today's podcast, because I finished it and then I realized that for some reason I think I didn't click on the start recording button for whatever reason. So now I'm recording it the second time, and so I will probably try to keep this brief, because I think the original one was probably 25-30 minutes. I think I want to finish this in 15. So the first question: what will it take for the US dollar to keep its relative strength? I think there are three mechanisms that the Americans have, and these are let me just list them one by one. First, I think that the US dollar is certainly not the worst fiat currency across major economies. Perhaps it is one of the better ones, indeed. Right? The United States indeed has high levels of debt, but nevertheless, it still is issuing a reserve currency. It still has the global trade, a large share of the global trade denominated in the USD. And very crucially, the United States, the Federal Reserve, is at least bluffing in tightening its monetary policy. And the US government is at least bluffing in really being a more, judicious in its spendings. Contrast this with the likes of the eurozone, Japan, and Britain. These three are really worse areas, right? The eurozone is, in my judgment, the least serious among serious economies. It is really a basket case, and I think one could argue that the policymakers in the eurozone are really fit only for managing banana republics. They have the eurozone has long-lasting structural problems. They have high labor cost, the highest labor cost. They have always had high energy cost and high cost of raw materials, but now they have even higher energy costs and even higher cost of raw materials, the highest in the world. And they have been progressively losing their technological edge in comparison to a lot of the developing economies, such that their productivity is not really that high. And then it has the toughest regulations, the most some of the most top-heavy bureaucracies, the least efficiency when the lowest, some of the lowest, not necessarily the lowest, but some of the lowest among serious economies indeed, efficiencies when dealing with the government, getting permits, getting companies set up, getting some contracts, getting things verified, the banking system, everything is just inefficient. Right. So all this put together means that Europe, it is high cost, low input. And I think this basically means the fundamentals is extremely bad, and it's getting quickly worse. Japan, and by the way, at the same time, it has negative interest rate, high inflation. Higher inflation than the United States, negative interest rate. How crazy is that? What's going to happen in here? Of course, there is also the refugee problems, and a lot of people have touched on this, right? They have mentioned that the food problem that will emerge after the failure of the harvest in Ukraine, let's just say, in Eastern Europe this fall. What's going to happen in Africa, in the Middle East, in some of the poorer regions of the Middle East, is that there will be some exodus. And this exodus, or exodi, I don't know, will basically means that there will be a lot of migrants. Couple that, of course, with already millions of refugees from Ukraine. Wow. One really shudders to imagine what's going to happen to the eurozone economy. I don't think anyone who is sane enough, who is conscientious enough of these issues, can live without fear. It's just crazy. I think it's really, really, really crazy. That some people must really hope that they will win in Russia and be able to pillage Russia and do so in time before the fall. Because if the fall comes and Russia is still winning, Europe is screwed. There will be huge unrest and people will starve. Some people will starve. This is crazy. Of course, the euro, the worst of major fiat currencies in my judgment. Then there's the Japanese yen. Japan, compared to Europe, is better, right? They have a very productive workforce. They have distinct advantage in advanced technologies. In fact, in terms of the complexity of the economy, Japan has for over 2 decades been the number one in the world. So its industrial base is exceptionally strong. But its financial system is not. Japan has, I think the Japanese central bank has pursued a severely flawed monetary policy in pursuing inflation, because there's this, in my judgment, mistaken belief that the period of stagnation in Japan economically is the result of a lack of inflation. I think it's really something to the contrary. It is not because of deflation or lack of inflation that has caused Japanese economy to stagnate. Rather, it is money printing that has and growing levels of debt, government and corporate, that has stifled the Japanese economy. Because these high levels of debts have propped up. Sorry. That was a mistake. Propped up a lot of the zombie companies in Japan, and these zombie companies should have been reformed, right? A lot of their businesses could have been reorganized to be more efficient and more competitive, right? It is really a tremendous feat that the Japanese still have a leading advantage in their industries. The Germans can't do it, but the Japanese still can. They still lead in a lot of the industries and technologies, despite, not because of, these reckless monetary policies. But the result of these monetary policies is high levels of debt. And this has forced the Japanese central bank to print money like crazy. And especially in the last few weeks, they have been reckless. I mean, I think it's really a mistake to continue to pursue this policy, But they are doing it, and this means that the Japanese yuan will continue to weaken because they are basically printing money. And then we have Britain. The situation here in Britain is absolutely not better. Certainly, I think worse than Japan, but perhaps better than the eurozone. What's basically the fundamentals in in Britain is that Britain has thoroughly deindustrialized itself, and its economy has been relying primarily on financial services. However, in response to the war in Ukraine, the policy that the British government championed and pursued with enthusiasm has led to some loss of credibility in the financial system, in the British financial system. This has led a lot of wealthy individuals, a lot of wealth to flow out of the British financial system. And as the credibility of the British financial system weakens, I think the share of the British financial system in relation to the global financial system will come down. And of course, Britain also suffers from the same fate in terms of cost as Europe does. That means that whatever that is left of Britain's industrial base will continue to weaken, and that the British financial system will also shrink in size. That means that, Britain fundamentals get worse and money will flow out. People will sell their pound. What's going to happen? Pound will weaken, right? So these three major fiat currencies that are freely exchangeable, they are worse than the US dollar. So absolutely that will be one of the main mechanisms. I think this is the number one primary mechanism that has led a lot of the American officials, whether in the Federal Reserve or in the government, to believe that they can just bluff a little bit, right? Raise the interest rate a little bit, and then of course cut spending just a little bit, or be more judicious in increasing their spending. Then this will suffice, because it will be the least irresponsible among all the irresponsibles. I mean, the least irresponsible among the irresponsibles. So that's number one. Number two, I think if the first one doesn't work, or actually when the effect of the first mechanism reaches its limit, the United States has another trick, which is to prick the bubble in its financial markets. The American financial markets, of course, has tremendous bubble in bonds, in real estate, in stocks, and these bubbles are at a level that is historic, record-setting. And every week that passes by, these bubbles are actually getting bigger and bigger. Not all of them, I think not all the time, but I think the real estate still is getting bigger. The stock market, certain sectors, indeed, still. So what this will mean is that if the choice comes between the financial market or the financial system, I think that the Americans ultimately will choose the financial system over the financial market, meaning they will prick the bubble in the financial market to save whatever that can be salvaged of the US dollar. And so basically, and they can do this, right? They can do this by manipulating with the interest rates. They can manipulating with some regulations. They can do the tightening. They keep on tightening, and they can do this. I mean, if the stock price refuses to come down, and they really need it to come down, the Federal Reserve is perhaps the biggest holder of assets. So there is no argument. I think they can absolutely do it if they need to crash the market, they will be able to crash the market. And as they crash the financial market in the United States, what's going to happen is that a lot of money that has been printed over the decade will just disappear. And of course, there will be a wealth transfer. The wealth transfer has already mostly completed or concluded. So now it will just, they started by printing some money. They transferred the wealth from the have-nots to the haves, and then the haves sell or use their stocks as collaterals, or borrow against their stock, or maybe sell their stocks, and then they purchase real assets, and then they prick the bubble, cause a reset in the financial market, and wash, rinse, and repeat, right? So I think that is very much on the cards. I think that is why I think it's unwise to invest in financial markets, even in the United States. And of course, it's absolutely unwise to invest in financial markets in eurozone, in Japan, or in Britain, because these markets, I don't think, even if the price of the assets go up, it will go up less than inflation. And absolutely, I think they will come down too. So they will come down and there will be inflation. So it's really lose-lose, right? The only thing that I see that can help you preserve wealth is the one thing that is really not in a bubble. Real stuff, not speculative stuff. And I'm not going to go too much in detail there, because I said 15 minutes, I'm already at 16. So let's go to the third mechanism, which is that the United States may choose to default on its debt obligations. That will be the last mechanism, the last trick in its bag. And this is a very powerful trick, because I think a lot of, first of all, I think a lot of the American politicians have been preparing the public for a potential default. And of course, they will say, they will not call this as a default. They will call this as as sanctions. And of course, they will, when I say default, what I mean is that they will choose not to pay back all the debts, or even, of course, or even interest owed to China. And this will be because they will provoke some conflict somewhere. I don't know where, but I think we know where. And then they will say that this is authoritarian government, that these people don't respect the rules, and since they don't play by the rules, we need to sanction them, and we sanction them by freezing their assets. And one major part of their asset holding is their treasury bonds. Okay, now we don't pay them back. So that will probably be the last thing that they will do. And of course, this will upset some people, but I think the same people that could be upset by this default are already upset at the United States, and people who are deeply embedded in the Western financial system, people who are deeply aligned with the interests of the American financial system, will not be so upset. They will, of course, privately understand that this is default, but publicly they will say that this is because we need to fight for freedom, that so we need to support democracy wherever possible, that we need to spread freedom or whatever, all the nonsense that you can spew, right? So these are the three mechanisms, and so with these three mechanisms, armed with these three mechanisms, these three tricks in its bag, I think the United States can indeed keep relative strength in the dollar compared to the euro, the Japanese yen, and the British pound. And in fact, I think also the Chinese yuan. I'm not going to talk too much about the Chinese yuan, because that really warrants a separate discussion. Suffice to say that China also is quite invested in a globalized economic system, which is fastly disappearing and disintegrating. And the economic fundamentals in China is not so good. And at the same time, the Chinese yuan is a fiat currency that they are servicing. The Chinese government is servicing actively a financial bubble, similar to what I think Japan has been doing for a long time, and what the US has been doing for the last decade. So that means the Chinese yuan will progressively weaken against the dollar. But I think the fundamentals in the Chinese economy is better than that in the fundamentals in the eurozone, in Japan, and of course in Britain. That means I think the Chinese yuan will strengthen in comparison to the euro, the Japanese yen, and the British pound, but it probably will weaken against the US dollar. I will talk about this in a future discussion, I think. So this is the mechanisms. Now, how long will this last? Of course, I think this will not last forever. And the main reason that this will not last forever is de-dollarization. As people use dollar less and less in the deglobalized global economy, a lot of the US dollar will basically go back, flow back to the United States. Indeed, as the other fiat currencies get sold, what people are doing is actually they are buying US dollar, and they are moving their assets, their wealth to the United States. That means the inflation will continue to go up, and as the use of the dollar actually comes down across the world, what is there to prop up the US dollar will be weaker and weaker progressively, and that means that inflation ultimately will catch up to the American economy, and the system will not actually last very long. And I think maybe in comparison to the euro, which I think will not exist after 3 to 5 years, it's still a good bet. But compared to more rounded economies, such as that of Japan's, I think in the long term, the US dollar will not be so strong. I think it will weaken. How long this will take? I think this probably will take, and this is complete guessing, I think this will take longer than it takes for the euro to disappear. I think the euro is 3 to 5 years, so I think maybe in the next 3 to 5 years, the dollar will be relatively safe, even though it is not safe to hold, right? It's relatively safe, but it's unsafe. It's unsafe because of inflation, but it will depreciate less compared to a lot of the other fiat currencies. And I think that this stagflation situation, this is a stagflation, global stagflation situation will last, and eventually, I think as a lot of the productivity gets destroyed, as a lot of production gets destroyed, the stagflation will convert, and as some of the fiat currencies disappear, namely the euro, I think the stagflation will really be transformed. It will become a pure stagnation, a deflation, and then it will start as the cost becomes lower and lower. At some point, it will make sense again to engage in productive economic activities for a lot of businesses that have to shut down, and finally, that means that recovery in perhaps a decade's time. So in the first 3 to 5 years, maybe the dollar will be relatively strong, but in the 5 to 10 year time frame, probably the dollar will be will progressively weaken because its fundamentals is better than a lot of the bad ones, but it is by no means good. All right, so this is my view on this issue. I hope that you have enjoyed this podcast, this discussion. And if you have any other comments and ideas, do leave a comment below. This podcast is available currently on YouTube, Odyssey, and Rumble. And I'm thinking perhaps also finding some pure podcast platforms to post it. So I will, when I have that, I will, of course, make an announcement at some point. And lastly, don't forget that I have a Telegram channel, the link of which I will leave in the comment area below. Thank you and have a great day.